Kenya's banking sector has posted incredibly impressive results for the financial year ending December 31st, 2021, despite operating on a difficult environment in the wake of the COVID-19 pandemic. But what exactly do these profits mean, especially for you, the common mwananchi? Our reporter Colin Sogutu sat down with experts to break it down and filed the following report.
Have all posted impressive profits in the financial year ended 31st December 2021, with 7 top-tier banks posting about 74% net growth. Well, we have a number of experts to help us unpack what all this means to you.
In a case a bank is performing well, this also means that they're in a position to finance the economy in general, that is the corporate and also the individuals in the economy. And this will also mean that the people that want to deposit to the banks will be more comfortable to deposit in a bank that is doing well in their profits.
The banking sector joins other industries hit hard by the coronavirus pandemic, a period seen in reduction in net earnings, mass layoffs and freezing of dividends in 2020.
We should celebrate good performance on our banks because it means that the banks that are willing the economy are going to be there to do so. So that's one. What does it mean then for the economy? It also means that for the economy that we should now see the economy turned quite significantly. We have invested a lot of money in government paper. We don't like it. We'd rather be lending that money to productive business. We'd rather be lending that money to SMEs.
The surge in profits are due to huge write-backs on loan loss provisions, which were aggressively provided for by bank managers seeking to take advantage of the COVID-19 shocks to clean up their bad books in 2020.
2021 was a recovery year, so the revenues grew. You saw banks growing their top line. People started borrowing again. The moratorium on loans, there was a moratorium for people, not for on interest and even on principal in some cases, so that economies could survive during COVID. But now banks can actually go back to their usual business and charge interest on their loans, etc. So their revenue top lines have grown.
With the lenders digitizing, Metropole TV learned that a lot of transactions came through the channel, contributing to the growth in performance.
What it portends is that there's going to be more of focus, especially on supporting SMEs to recover, more in terms of digitalization and offering products through a technology-supported platform, and so I think it's going to be a sustainable performance. Probably not as high as what we've seen in 21, but it's going to be more of a fairly good recovery for the banking sector.
But what do the lenders need to do to sustain their profits in case of any occurrence of uncertainties?
For the banks to sustain their performance, it is important that they check on their staff profitability, staff productivity. And this entirely means that they should ensure that the staff are working well. And this can also be achieved by making the systems automated to reduce on the time that the workers are serving the clients, and also to invest more in technology and automation of services where most of the clients can just do self-service on everything that they need.
In addition, data from the Central Bank of Kenya showed that in 2021, Kenyan banks conservatively sat on excessive liquidity and reduced lending to key sectors of the economy to reduce exposure on loan defaults and loan loss provisions to remain profitable. Colin Sogutu, Metropole TV.